Good morning, everybody. This is the live market open of Friday, October 30th. It's the last trading day of the month, and next week we'll already start with the new month. I'm Yohay Elam of Forex Crunch and Market Movers, and this is the show for fx3.com. We had a busy 24 hours, and we still have a busy day ahead, including all the last moment fixings. As usual, we'll cover the recent developments, charts and levels, and the next we'll talk about next week, of course. Let's start. And of course, we await your questions in the chat box. If you cannot see the chat box under the video, just please go to tlk.io/fx3-forex-live-video. Let's start with what we had just now, the big event of this morning. The Bank of Japan left interest rates on hold, not only interest rates, but also its monetary policy. No new printing in Japan. I had expected that they would do something. What the result of this no move, the only is a double top here at 121.50. The Bank of Japan, Kuroda, they did lower their forecasts for reaching inflation. Naturally, they find it harder to find. They moved it only by 6 months. They see in the fiscal year of 2015, inflation only at 0.1%. And then, of course, into the future, gradually rising. But they did not introduce new measures, just lowered their forecasts. Okay, so this was some kind of disappointment, or more or less within expectations, a bit below expectations. That's why we didn't see dollar-yen rallying. Why did we see this attempt on this double top at 121.50 before the pair fell back down? That's because, first of all, expectations and the choppy moves, but also we heard from the Japanese government that they are considering introducing more fiscal stimulus, supplementary budget of 3 trillion yen. So we did hear from the government, but not from the central bank. That's why we had this move to the upside, but limited at resistance at 121.50. This line, we talked about it as a false break, but now it seems more real. Okay, so that's the big event for today. The Bank of Japan also released its semi-annual outlook, and well, that included the lower GDP forecast, lower inflation forecast, and Governor Kuroda also held a press conference, and but he didn't say anything very interesting. I think he did say that inflation will rise when oil prices rise, so it's a bit clinging to the hope that these prices of energy will rise, and that's one reason. I would also say there's a political aspect to this as well. Good morning, everybody. That the Bank of Japan does not want to be seen as one that manipulates the currency, okay? Because we have this TPP agreement, the Trans-Pacific Partnership, signed by 12 countries, including the US and Japan. And if the Bank of Japan is seen as manipulating the currency, trying to weaken the yen, bigger thy neighbor policy, it would impede, in theory, the approval, the ratification of this agreement in the US Congress, okay? The US Congress did manage, by the way, to avoid reaching the debt ceiling in the last moment, just an hour ago or so, which is very early hours in the United States. So maybe it is functioning a bit better, but to ratify the full agreement will take time and lots of politicizing, especially as we enter an election year. Okay, so that might be also a consideration for the Bank of Japan. Okay, let's look at more events. First of all, the fresh event from just now, when we began the show, we had the Spanish Spanish GDP, a bit below expectations. Growth stood on 0.8%. In Q3, that's a very early release for Q3 in comparison to other Eurozone countries. So it's a bit of a disappointment, and we see euro dollar stuck under 110. It made a false break above 110 all the way to 110.16. Well, all the way, it isn't that far. Good morning, Sean. Good morning, Ross. We also had weak retail sales from Germany. We had it at, let's look at the calendar here. Where are the figures? Yeah. So GDP here in Spain came out at a quarter-over-quarter 0.8 after 1% last time. On some calendars it appears 0.8, some 0.9. So anyway, it's weaker than the previous quarter, and Spain faces elections in less than 2 months. Year over year, actually, so that's quite all right, 3.4. So that's not such a big deal, but the fall in German retail sales, the fall, it stayed flat at 0% instead of rising 0.4. And in the previous month, it was revised to the downside from originally 0.4, a drop of 0.4 to a drop of 0.7. Also, year over year, it's below expectations, only 3.4 to the upside instead of 4.2. So that sort of helped sort of trigger this fall back into range of euro dollar. False break over there. We talked about it previously in the show. That euro dollar tends to have these false breaks. It doesn't mean we won't see a break later on to the upside. And euro dollar, the next levels to watch are before the Fed decision we had here, 110.70 and 131.10. To the downside, 109.50 is very weak support. And then we have 109 really critical. Sorry, not really critical, but strong support was the low line for this cycle. And really strong support is at 108.10, which was the post-recovery low for the pair back in July 20th. Okay. Also from France, data was not so good. 0% in consumer spending, the French version of retail sales. So all in all, the old continent, we didn't get very impressive data. Okay, but it's not only in Europe. Okay. Good morning, Bocha, I think your name is. Anyway, good morning, everybody. Your questions are certainly welcome. Yes, let's begin from yesterday's big event. Yesterday we had GDP in the United States. It came out at 1.5%, which was actually within expectations, okay? Because expectations stood on 1.6%, and it was also balanced by other figures, such as, so here we have it right here. No, right. Where is that? Why is it escaping from my eyes? Here we go. So, yeah, gross domestic product 1.5. 1.6 was the expectation. 1.1 was the figure on the Atlanta Fed GDP now. And after the relatively hawkish Fed decision that they opened the door for a rate hike in 2015, in December actually, expectations were perhaps higher. Anyway, it came out as expected, more or less 1.5. Remember, it's an annualized figure. So if you guys are in the UK and you see in the UK growth rate of 0.5%, that's quarter over quarter. And in the United States, it's annualized. So 1.5% annualized means around 0.4 quarter over quarter. So it's quite similar to the UK. And the silver lining here was that the consumer, well, few silver linings. Consumer spending was more or less the same, annualized 3.2. Business investment was okay. Final sales was okay among the components of GDP. What dragged it down was the drop in inventories. Had it not been for inventories, a drag down on inventories, you would have seen an annualized growth rate of around 3%. Okay, and what happens when inventories are depleted? They need to be replenished in the next month. So in the next quarter. So that means that the expectations for Q4 GDP growth will be better than Q3. All in all, so far this year, we had an average of 2%, 0.6% in Q1, 3.9 in Q2, and 1.5 in Q3. If you sum it up, it's around 6% divided by 3, it's 2%. It's sort of the new normal, if you wish to call it the new mediocre. But I believe that in Q4 we'll have something that'll be a bit better. So it wasn't a big excitement, but it shows that the US economy is still growing at a steady pace, and it leaves the door open for a Fed hike in December. So that was yesterday's big event. We also had, so GDP 1.5, US inventory silver lining. Jobless claims, we had them, they remain at very low and good levels, 260,000. The 4-week moving average, which is a wider measure, not a weekly one, and it sort of provides more info, is just under 260,000. So it's really great news on that front as well. So these are the events that we had yesterday. Let's look at a few charts. So yesterday the trend was a correction, a sell-off in the US dollar, very gradual, nothing is crazy. But after, let's say, euro dollar, here we had this big fall all the way to 109 because of the Fed. Then we had this gradual grinding all the way up to 110. Now we're standing at 109.95, and the pair is looking for a new direction. Okay. In the pound, we've also seen it more moderate move, a fall all the way here to 152.40, and then a gradual rise back above 153, still under resistance at 153.70, above support at 153, and big resistance 155, big support 152. Okay, dollar yen, here we've seen more action. Well, that's recent action is because of the Bank of Japan, and 121.50 becomes stronger resistance. So the pair is not hugging 120 anymore, at least for now. It's trading on a higher range, but it's not very far from the previous range, and the range at least is a bit wider, and that's good news, of course. Okay, so 121.50 is the level to watch on the upside. 120, of course, on the downside, but more as a magnet, and 118.10 here, right here, is support. So if we look at the daily chart of dollar yen, we're seeing stronger moves. We had this dead period here where the pair hugged 120, and now it's a bit more wild, not wild, but ranges are a bit wider, and that's good news. Dollar CAD, quite a roller coaster in recent days, but we have events for today. So we had this rise on the, we had oil prices pushing the pair lower right here, the Fed pushing it higher, and now the pair is sliding because of this correction in the US dollar. And we have later on Canadian GDP figures to determine the next move. Aussie dollar has been recovering just a bit, still pressured. We had figures in Australia. Let's see if we have them here. We had in Australia, we had producer price index. Well, it's less important than CPI, and CPI is already out. So we had 1.7% year over year, better than last time 1.1. So that also helped the Australian dollar just a bit to rise back above 71. It's still battling this line. Further support 70.40, and beyond that 70, and the double bottom here of 69.35. On the top side, 72 and 72.80 are the lines to watch. New Zealand dollar. In New Zealand, we had a rate decision, so that they didn't cut rates, but they did talk about, they did send a hint about easing next month, and that weighed on the Kiwi dollar, and it found support at 66.15, which was also support earlier in the month. It did manage to climb back up. So the sell-off of the dollar is more helpful for commodity currencies than majors such as the pound, yen, and euro. Okay, so these are the major pairs. Let's talk about the events for today, and of course we encourage questions. So today we have a busy morning. We already had a miss on German retail sales, unimpressive French consumer spending, unimpressive Spanish GDP in comparison to expectations. And at 10 GMT, we have important figures from Europe. We have the Eurozone inflation data, and we have the Eurozone unemployment rate. So inflation is expected to climb back to zero from a minus 0.1% right here. That's headline CPI. That's the target of the ECB. Last month it disappointed by falling back to deflation. This time we're expecting it to rise. Why? not because of Spain, but because of Germany. Yesterday we had in Germany stronger than expected inflation numbers. By stronger, I mean 0.1% stronger on all measures. So, for instance, the harmonized, which is the European standard, it's now minus 0.1%. Sorry, it's 0% month over month instead of falling 0.1, and the euro for year figure is up 0.2 instead of 0.1. And the same trend also appears in the national figures, not the European standard. Sorry, that's a different figure. So all in all, 0.1% stronger than expected. So also for today, for the whole Eurozone figures, we're expecting a bit better than expected, a bit better than last month, sorry. So unexciting, but there are always surprises with that. So if we move one step back from this figure, we have the core inflation number for the Eurozone, and we have it here. Last time we had 0.9%. We don't have expectations right here. I believe it'll be again 0.9. If we don't see that rising as well, it's not really good news for the Eurozone. It still puts pressure on Draghi to announce more QE in December, more and perhaps a cut of the deposit rate. So everything looks, at the moment, negative in the medium term for the Eurozone. And why is it negative? Why isn't inflation rising? One of the reasons is that the unemployment rate remains high at 11%, and that's not good news at all. Okay, so that's what's going on in the old in the old continent. What else do we have today on our radar? Before I move on, we have a question from Jax W. He says, I think that people just stopped out when Eurodollar jumped above 110 for a minute. Everyone was saying that it was a major resistance. Do you see that as a good selling opportunity at this point? So let's see, Eurodollar, world's most popular currency pair, and for a good reason, of course. And we see here 110. A lot depends on the data. So I see that I still see a chance that the pair will break higher. I'm not sure we have a sell opportunity. We have to wait for the data. We have data in less than 2 hours. If we have stronger than expected inflation, we might see a break to the upside, but then I see the pair is limited at 110.70 and 111.30. And then we have data also from the United States. We'll talk about that soon. So I'm not sure it's a sell opportunity because we have important figures coming up quite soon, okay? And another question. But yes, it is important resistance because once we've seen that break above the level, we've seen these stops hunted down and the pair falling back down. Now, in Eurodollar, we've often seen a false break, fall back to range, and then the real break coming. So we could still see a real break, but I think it's more data dependent. And another question also, why did the data come out negative dollar on the day that the Fed spoke? Didn't she have the data beforehand? Didn't the Fed have the data beforehand? So, well, the Fed did have the GDP data beforehand, I believe. So we don't know that officially, but they did have it, and GDP was okay. So they didn't want to come out as fools, and I think they didn't come out as fools because the data was okay. I mean, GDP came out as expected, and there was even a silver lining with inventory, so that we could see that as a positive. Why did we have a correction in the US dollar? Perhaps the move was a bit too strong, and we have a correction. And there's also another factor to take into account. Okay, so let me talk about. Today is the last day of the month. Okay, so often we have these end of month fixings. We have not the last day of the month. Tomorrow is the last day of the month, October 31st, but it's the last full trading day of the month. So we have portfolio managers trying to rebalance things. We always see last minute scrambling. So if we had a strengthening of the US dollar so far this month, we could see some portfolio managers just have too many bigger portion of US dollars in their portfolios, and they need to rebalance it. So they're selling US dollars. Now, I read in a note by Barclays, they said that according to their models, they see a strong sell signal for the US dollar because of these end of month fixings. Now, it's not a clear thing. We also have data coming out, and the fixings come at 3 GMT. Sorry, now it's 4 GMT. It's 4 in London. Okay, so at 4 GMT, 4 in London, we have these fixings. So we might see a lot of scrambling towards that event, but perhaps a rebound afterwards. Now, yet again, these models are not perfect. End of month does not determine everything. We also have data. We also have news coming out. But in general, it's important to note that this is one of the factors influencing the US dollar, some selling, and of course some profit taking. We had a strong rise of the US dollar after the Fed, and Forex is never a one-way street. We see some correction. Okay, so let's take another look at the chart. So far, we don't have the real break above 110, but we have more questions. Jean asks, may this be a market mover for euro dollar? What are you referring to? Sorry, I'm not sure what you're referring to. The end of month moves or GDP. Anyway, we have more figures for today. Let's take a look at what we have on the agenda. So Eurozone, we talked about these figures. We have GDP in Canada. Let's look at what we're expecting there. It's a monthly GDP release, and it's for the month of August, the second month of Q3. We expect month over month only 0.1%, weaker than 0.3%. It's important to see if there are revisions as well. The Canadian dollar in this context, currently 131.50. 131 is support. Let's update the line. 132.20. No, let's put it here. Updated data. 132.40 and 132.80 serve as resistance. Currently, dollar CAD is in a narrow range, but it may certainly break out. Okay. But we have lots of figures from the United States. Together, they make a big impact. All of them on their own are, if one would be released on its own, it wouldn't be important, but all of them are important, especially if they move in the same direction. So let's look at this FX Street calendar. One I'm looking at more particularly is the most important inflation figure for the Fed. That's core PCE price index, and especially the year-over-year one. Okay, so we had it last time at 1.3%. That's below the target of the Fed of 2%, and we don't have expectations here. I believe it'll be more of the same. If it'll be higher, it's of course dollar positive, lower dollar negative, because we have lots of inflation figures. We have the CPI, core CPI, excluding this, excluding that. The Fed focuses on this one, the core PCE price index, and especially the year-over-year one. Of course, we also have month-over-month. We have personal spending, which rose nicely, 0.4% last month. For September, 0.2 is expected. The PCE in general, which is, of course, the price index in general, which is, of course, impacted by oil prices, and that's expected to remain depressed at 0.3, but that's not such a big worry for the Fed because it's related to oil. And we have the employment cost index right here, which is expected to rise by 0.6%. This is a quarterly measure after 0.2 last month. This is also related to wages. It's not actual salaries, but how much it costs to employ workers. So this is also important. So if all the figures go, or most of the figures go in one direction, positive, it's dollar positive, especially the core PCE price index, which I highlight as the most important one. But if all of them go negative, it's of course negative for the US dollar. So it's quite a busy release. It can be very, very confusing. And we have to watch out all the figures, not only one. It's not only one. If we look at only one figure, it's the core PCE price index. But assuming we won't have a big surprise there, I believe we have to look at all of them. More questions? So Jean asked, to clarify, asks that we're talking about today's news for euro inflation rate, and employment data scheduled for today. Oh, sorry. So yes, inflation data for the Eurozone is a big market mover. even though we had figures already from Germany and from Spain. Okay, so yes, it is a big market mover. We're expecting better figures than last month, so 0% inflation year over year, and 0.9 on core inflation. If we have a tick higher on that, that's euro positive. A tick lower than that, it's of course euro negative. Okay, so we have to look. So it is a big market mover. The unemployment rate is less a market mover, but inflation certainly is. That's a single target of the ECB. Another question from Jax R. Wild. The big move on the dollar was just Fed speak and rumor. There was no data backing the move. That and Draghi talking down the euro. Well, of course, central banks have a lot of impact, even though it's not. Economics is a social study as well. It's not only numbers, okay? So even if the numbers were only okay or even bad, the fact that the Fed was hawkish or that markets perceived the Fed is hawkish, this makes a big difference. This weighs down, this pushes the dollar higher. And if Draghi talks negative without any data backing it, that's bad for the euro. Okay, so if John Hilsenrath at the Wall Street Journal highlights the fact that the Fed added the words next meeting to its statement and explains this as a hint for a rate hike in December, that's very dollar positive. Now, I think he's right. I think that is an important change. I think that is a hint. The Fed also was generally sort of more upbeat on the economy, still seeing long-term inflation as stable, still seeing employment is going up. So it is important. It is the Fed. What the Fed says can be more important than the data, even if the Fed itself says that the data, it's data dependent. Okay, so words can do harm, can do good, even more than data. Okay, so data in the United States, all in all, this week was sort of meh. Okay, GDP was okay. New home sales was disappointing. Durable goods orders was worse than expected. What else do we have this week? I can't remember all the figures. We can, of course, look them up. But you're right. The general notion was that data in the United States was not good, showing us a slowdown. The only real good figure was jobless claims, which remained low, 260, and the moving average continues falling. But that was the only figure, and it's a weekly one. It's not the most important one. GDP was not so good. Durables, yeah. So it's not always data dependent, and it's also consumer confidence came out below expectations. So that data looking back was not so good. Data looking forward was not so good. But the Fed, which makes the biggest impact, was still relatively positive, and this makes a big difference. Okay. Let's complete. We, of course, encourage more questions. And in the meantime, let's talk about more events for today. We have John Williams of the San Francisco Fed talking at 2 GMT. Let's see what's his take on GDP, on the Fed decision, on what's going on next. Okay. And we also have at 3 GMT, we have the revised consumer confidence. Let's take a look at that. So it's expected to, we expect a small upwards revision from 92.1 to 92.5, but it's a revision. It's not the first figure. Unless we get a big surprise to the upside or to the downside, this isn't important. So this big bulk of releases at 12:30 GMT is what really matters for the US dollar. Okay, let's look at a bit more charts before talking about next week. And of course, please bring up your questions. Hope to answer everything in detail like I did now. So we talked yesterday about dollar Swiss getting closer to parity, but we had a nice dollar correction. So we didn't get there. The high was 99.50, and now we're back down under 99 at 98.83. Let's update the lines here so we can mark this level here, 98.15 is support. And this is a nice separator, right? 98.70, we're a bit, sorry, yeah, a bit above that line at the moment. And on the top side in dollar Swiss, we have this kind of level here. All in all, the trend remains to the upside. If we have a resumption of the dollar trend, parity is certainly within reach. Another reason to be a bit more bullish on this pair is that the Swiss National Bank, of course, intervenes all the time in markets and wants a weaker Swiss franc, mostly against the euro, but it also cares about the dollar. Just wants a general weak Swiss franc. Euro Swiss, 108.70, back to the range. It fell too much for the Swiss National Bank, 107.50. Now it's back to range. I think they will not intervene if it reaches 110, but currently they keep the pair bid. Okay, Euro Pound, quite a big fall because of Draghi and then because of the Fed. Remember, if the Fed hikes, the Bank of England follows. So we had this second fall here, below 72, currently still below 72. Support is right here at 71.40. Resistance, I still see it at 72. All in all, I see the trend as down because of monetary policy divergence, more trouble in the Eurozone, and the UK is looking better. Okay, Euro Yen used to be a safe haven couple. Now it's the yen is well, both currencies are a bit weaker, but the euro is doing worse than the yen. 132.75. We already had lower levels right here at 131.50. Okay, 133.15 is resistance, followed by 134.20. And let's go to one of your favorites, pound yen. Lots of choppiness. We had another attempt on 186, close but no cigar. We had it rise up to 186.01. 186 remains an important line, and not from this week, and this began quite a while ago, because when the pair traded in a higher range in September, this was support. Okay, 186. So we had this false break here, a fall back to, let's update the line also here, 183.80, and now another attempt on 186. So this is the wide range for the pair, 183.80 to 186. We didn't have the big news from the Bank of Japan. Sorry, so we don't have a break above 86. Next week we have the Bank of England, and that might supply more ammunition for the pair to go higher. So these are major pairs and major crosses. For a move on to next week, I'll ask you again 4 questions. Let's just take a peek at oil. Oil still made this unjustified move back to the upside, stabilizing above 45. I'm talking about crude oil, WTI. Okay, let's take a peek at euro dollar. Very, very close to 110. Very much hesitating. Lots of stops probably above this level. And let's talk about next week. So next week, we have a very busy week because it's the first week of the month. Okay, so we always have lots of action in the first week of the month because we have, let's cut to the chase. On Friday, we have the non-farm payrolls, and that's, of course, critical for the Fed, critical for the dollar, critical for all markets. But beforehand, we have on Monday, the Chinese Caixin manufacturing PMI. There has been a change in this publication. We used to have a preliminary number and the final number. No more. This time we have only the final number. That's early on Monday. That's critical for the Australian dollar and important also for the global economy to see how the global economy is doing in general. Okay, we have US manufacturing PMI on the same day, and that serves us as a hint to what's going on in the non-farm payrolls. Of course, US manufacturing PMI has been worse than expected, and it's on the verge of contraction, still in growth territory, 50.2%. It might slip into contraction. It might sound alarming bells and weaken the chances of a rate hike in the United States. Okay, before we move to Tuesday, I see a question here from Jean. How would the BOJ impact euro dollar and why? Good question. It does have an impact because first of all, let's move back. The Draghi, I believed exactly 110 as we speak. Draghi talked to, because of Draghi and because of the Chinese rate cut, I had expected the Bank of Japan to move as well, to join in the currency wars. But with Japan not joining the currency wars, so far just lowering forecasts, doing sort of a very small step and not the big step, we have less printing of Japanese yen, and that's of course stronger for the Japanese yen, and that's bad for the US dollar and the euro. I don't think it has a material impact on euro dollar, but we'll have to see that later on. So I don't think if the Bank of Japan would have printed lots of yen, I think it would have strengthened the US dollar more than the euro. But since it didn't make a big change, I think it's sort of neutral. So the Bank of Japan's decision is more neutral for euro dollar. Okay. More important for the euro today is inflation figures from Europe, and then of course data from the United States. More questions, please. So we have that's on Monday, and Tuesday we have a rate decision in Australia. Economists are split. Most are not expecting a cut, but there are reasons for a rate cut. We'll talk about that, of course, in detail on Tuesday. We have the reasons for a cut are that the main banks, commercial banks, raised mortgage rates, but but the Australian economy is doing okay. I see more reasons for a cut than not, but because the Fed has been more hawkish, perhaps the Reserve Bank of Australia, Glenn Stevens, will hold its fire. He will hold his fire. So then we have a speech by Draghi on Tuesday. I'll have to check it out if it's really an important speech or not. And New Zealand deployment data also on Tuesday for those trading the QE. Wednesday is a very important day. We have Janet Yellen in an important speech. It's not really a speech. She gives a statement and then testifies in Congress in Washington. And this is an important public appearance. Just a second. Because it's just after the Fed decision and still a long time before the next one. She might lay out what she thinks was the US economy and provide us perhaps hints about what's going on next. In March, she used the testimony to hint that the Fed would later drop the forward guidance. So this might happen this time as well. Hint about rate hike or hint about not raising rates. At this point, she may already have the NFP data that we will get only on Friday. So that's a very important speech by Yellen, very important public appearance. But it's not the only thing we have. We also have ADP in the United States, ADP non-farm payrolls, always a hint towards the NFP, even though it's not always correlated. And the ISM non-manufacturing PMI, the services sector, how is it doing? It's the biggest sector in the United States, also a hint for the NFP. So this time we get the NFP with the full preview, the full build-up. On Thursday, we have it's pound day. We have a rate decision in the UK, plus the inflation report, plus meeting minutes. So it's I believe they'll be a bit more hawkish because of the Fed, and they'll deny that they're impacted by the Fed, of course. All in all, the UK economy is doing okay. GDP was not excellent, but was still okay. Retail sales last week looked good. Wages are going up. Let's see if they become a bit more hawkish. It's the quarterly inflation report, okay? And on Friday, of course, US non-farm payrolls. Big event, as always, to close the first week of the month, and the Canadian jobs report. So these are the main events for next week. Any more questions, everybody? They're always welcome. And let's see. Euro dollar is beginning to tick a bit higher. 110.05, still hesitating. We have an hour and 20 minutes until the inflation data in the Eurozone. I'll just do a small recap of the big event of the week of the Fed. Why was the Fed hawkish? I mean, what were the main points? That was Draghi, sorry. So what did the Fed do? 4 important moves. Let's move from the least important to the most important. It looked at employment as it did acknowledge the slowdown in employment, but saw the situation still as improving. Still, the slack is still diminishing. Inflation is somewhat lower in the short term, but in the long term, expectations, according to their surveys, inflation expectations are stable. They softened, they toned down the reference to recent global and financial developments. They're less worried about what's going on in the world. Okay. And the most important thing was a subtle change of wording. They made a reference to the next meeting regarding setting the rates. And that's new. So these two words, next meeting, are important. Of course, it's data dependent on inflation, unemployment, on international developments, and you name it. They're not chained. They can still make a change. They can still not raise the rates, of course. But they sent a hint, an intention that they're going to, they're seriously considering raising rates. So this was the main event. I see we have another question. Jean asks, what books would you recommend to learn about fundamental analysis specific for Forex, except for Kathy Leon? Thank you. So Kathy Leon is one of the best writers out there. I certainly agree. For fundamental analysis, the books that I have on my shelf, one of them is Attacking Currency Trends by Greg Mikulowski, one of the partners in Forex Live. That's a great book. Let's see if I can find it here on the shelf, or maybe, and I can, just a second. So, here you go. Let me open up the screen, the camera, so you can see the book. So, yeah, maybe too much light. Can you see it? So it's called Attacking Currency Trends, How to Anticipate and Trade Big Moves in the Forex Market by Greg Mikulowski. And there are, of course, lots of other books. If you want more, apart from books, if you want more updated data, of course, it's on Forex Crunch. In any case, let's, if you don't have any more questions, let's get to the wrap up of the show of today. Okay, so this is the wrap of the live market open for Friday, October 30th. Lots of action markets, and it's the last day of the month. So we're expecting the end of month fixing, scrambling. According to some models, this means some US dollar selling, a correction of moves we've seen beforehand. But remember, it's not the only thing that happens in markets. Recent developments: the Bank of Japan left policy on hold, only lowered forecasts. We've seen dollar yen creating a double top at 121.50, but sliding back to range because we didn't have the real action. We didn't have more yen printing from the Bank of Japan. The Bank of Japan hopes that oil prices will push inflation higher and that companies will lift wages. More hopeless action, that means a stronger Japanese yen. Okay. As elsewhere, we had yesterday US GDP coming at 1.5% within expectations, and US inventories were sort of silver lining. They weighed down on expectations. They weighed down on the growth rate, and this implies a stronger growth rate in Q4 because of replenishing of these inventories. Other than that, jobless claims were okay. Spanish inflation missed, but German inflation was stronger. Other figures from the Eurozone were weak: German retail sales, French consumer spending, and also Spanish GDP. But today's big event is, of course, the Eurozone inflation data. We're expecting 0% inflation headline and 0.9 on core. We have that in just over an hour. That's really critical. So that's, of course, important for the next move of euro-dollar. Euro-dollar showed us some kind of false break. Yeah, struggling with 110 as we speak, 109.99. We had it move swiftly to 110.16, only to fall back down into range. Inflation data critical, and then we have, of course, we have lots of figures from the United States. It can be quite confusing. The employment cost index to combine inflation and employment, personal spending, personal income, and the core PC price index, which is of course critical to inflation. That's the Fed's favorite. We also have William speaking and the revised consumer confidence from the University of Michigan. And for those of you trading Galoonie, we have Canadian GDP. Dollar CAD is 131.50, and ranges are 131 to 132.40. Let's see if we can move higher on dollar CAD. Let's see if we can move lower on oil. I think the stronger oil prices that we've seen this week, the rise in oil prices we've seen this week is unjustified. So let's see how that pans out. Elsewhere, pound dollar recovering to the previous range. Range is 153 to 153.70. Higher, wider range 152 to 155. Aussie dollar back above 71, still struggling. 70.40, 70 and 69.35 support. Resistance 72, 72.80. New Zealand dollar also on a recovery path from these lows at 66.15. Above 67, high resistance at 69. Okay, I see we have, that's the wrap up for today. Remember, it's the last day of the week, last day of the month. We might have too much wild action in the last moment, especially around the London fix, but who knows where it's going to be. More questions I see here from Jean says, so I have it now and start reading it soon. Any more books, please? Well, there are lots of books out there. I can't, from the back of my head, I can't get anything now, but perhaps for Monday's session, I'll show you a few more books I have here on the shelf. If you, for FX Rate has an excellent learning center, and for a site that focuses, a bit of self-promotion, for a site that focuses on fundamental analysis, that's my site, Forex Crunch. Okay, Vedran says dollar CAD, please. So I just covered that right now. But if you have an additional question on that, just let me know. And I guess that's it for today and this week. We'll be here today. We'll be here also on Monday as usual. We'll talk about the big events on Monday, the Chinese Caixin manufacturing PMI, and let's see how markets open. A new week, a new month. So I guess that's it for today. Thank you everybody for coming. Thank you very much for your questions. I hope we get more action like on the Fed day, and not boring moves like we had early last week, for example. We need this volatility. We need excitement. So thanks again, everybody, and see you next week. Safe trading, and bye-bye.